myself, I am Rosa Osorio. I am the program manager for the Contractor Development and Bonding Program, which is administered by Meriwether and Williams Insurance. I have international company. So my background has been surety underwriting. Prior to coming to Meriwether, I was a surety underwriter for about 15 years. Then I joined Meriwether and I've been here for 16 years. So yes, I started surety when I was 5. So I know you guys are doing your calculations. So let's get started. So why do I need bonding? So bonding is a requirement and is to meet the owner and the general contractor requirements. It's also to comply with federal, state, and local regulatory requirements, to meet lender and investor requirements, and of course, to provide confidence to clients or project owners that you as the contractor will complete their project successfully. Next slide, please. So surety bonds are mandated by law on public works projects. On a federal level, we have the Hurd Act of 1894 and the Miller Act of 1935 that says that performance and payment bonds are required on all public projects over 100,000. On the state and local level, we have the Little Miller's Act, which varies by state. And so I highly recommend that when you're bidding on projects, you look at each state, your local entities, and see what the requirements are, because most likely there will be a bonding requirement. I've seen a lot of like small proprietaries that require bonding on projects over 25,000. There's some that require projects over 100,000. So you always have to check and see if the bonding requirement is there. And if it's not there or you don't see it, always check with the project owner or with the entity. Ask the question, is there bonding requirement on this project? Because you need to qualify for bonding. Bonding is not something that you can just buy like insurance. You have to qualify for it, and it does take time. And depending how big the project is, you're going to need, documents. And so you need time to, submit all of that. The surety underwriter needs time to underwrite the bond. And so you have to check ahead of time. Next slide, please. So bonding ensures owners will receive finished product at a negotiated price according to the project plan, specs, and contract requirement, meaning that you're going to perform and complete the project satisfactorily according to what the contract requirements say. It ensures that that all the project subcontractors, suppliers, and vendors are going to be paid for the service and materials provided. So this means that with the payment bond, you're ensuring that all subcontractors and suppliers will be paid. If they're not paid, then that's when the liens are filed or the stop notices are filed. So we have to make sure that everybody gets paid for these projects. And it also acts as a pre-qualification instrument. So when a project owner sees that you are bondable, they know that somebody has vetted you out and that you are, good to perform the work, that they, it gives them a level of security that the project is going to be completed satisfactory. Next slide, please. So what is a surety bond? A surety bond is a three-party agreement that guarantees the completion of a project. It is between the contractor, which is also called the principal, the surety, which is the insurance company that's providing the bonds, and the owner or the obligee, so the project owner. So the surety provides assurance to the project owner that a contractor or principal is qualified and will perform a contract and pay all subcontractors and material suppliers as stipulated in the contract. So basically, it's assuring the project owner that you will complete the project satisfactory with no issues. Next slide, please. So it also protects another party. So unlike insurance, bonding protects the project owner. So
No, thank you.
for insurance,
Absolutely no, thank you.
for insurance, it protects you the, that there's going to be, so for insurance, they anticipate that there's going to be accidents, right? So it protects you in case there's an accident. For bonding, it's the opposite. It protects the project owner. So it's ensuring the project owner that you're going to complete the project satisfactory. And if you don't, there's going to be claims on the payment and performance bond. You cannot buy it like insurance. So like insurance, you pay your monthly premium. For bonding, you pay a one-time premium for the payment and performance. And that's it. You don't have to pay anything else. You don't have to pay monthly. It's a one-time premium until the project is completed. If there's any change orders at the end of the contract, then you will be charged additional premium based on what the overrun is, or you'll be given some money back if the project finishes below the original contract amount. So if there'll be either an overrun or an underrun. You must qualify for it. So the sureties will do an intensive underwriting process that they'll do to make sure that you are qualified to perform this project. Like insurance, you just, go and pay the premium and you have insurance on a monthly basis. For bonding, you have to qualify. It's kind of like obtaining a bank loan. Again, you have to qualify, and it does take some paperwork and it does take time. It does not happen overnight. So if you're bidding on a project and it bids tomorrow, depending how large the project is, most likely you're not going to get the bonds. Unlike insurance, no losses are expected. So the surety is expecting you to have no claims on the bonds, because if you do, that would be a negative point on your side. And once you have a claim and a claim payout, it's really hard to get another bond for a while. And what that means is, for bonding, if there's a claim and the surety has to pay out, you, the contractor, have to pay the surety back everything that they paid out. It's not like insurance where you do a monthly premium, you have an accident, the insurance company pays out, and they increase your monthly premium and you continue. You don't have to pay anything back. But for bonds, you do. So you do not want to have a claims record on your record, because especially a claim payout. Now, there are some times where there's going to be claims filed against your bond, but if you negotiate with the surety and you pay them back, I would say that you have some type of agreement in place. Then as soon as you're done with that agreement, then you should be able to get a bond again. But claims are never good. So the goal is to not have any claims either on your performance or on your payment bond. And bonds acts as an indemnification. Like I said, it's for bonding, you have to sign an indemnity agreement. And what that indemnity agreement is saying is that you, as a contractor, are signing on behalf of the company and personally. So if there's any claims and the surety has to pay any claims, they will come after your assets. So that's why they're asking you and your spouse to sign or indemnify personally. So they will come after your personal assets. So again, the goal is to have no claims in your records, no claims payout. Because if you do, they're going to come after the payments, everything that they found, including any legal fees, which those can be very high. Next slide, please. So what type of bonds are there? What type of surety bonds are there? So there's a lot of surety bonds. There's contract bonds.
Rosa, there
Yeah.
there is a question here. Do you want me to wait till the end or ask
No,
or
you
and
can ask now.
okay. David Diaz says, I understand that it takes time for a surety company to issue a bond. However, in the case of bidding on new public works projects, does M&W provide some type of letter to satisfy the bonding requirement? Oh, sorry, bonding requirement during the bidding stage while the actual bond application is being processed.
So when you're going to bid a project, you're going to require to provide a bid bond. So that's when the surety will do the entire underwriting to provide you the bond. Whether you're low or not, they still have to do all the underwriting. There are some projects that don't require a bid bond, but they will require payment and performance bond. But I highly encourage that, you still go to a surety and try to get pre-approved before you get to the awarded contract phase, because we need to know if you can bond the project. What happens if you bid on a project with no bid bond and you get awarded the contract, but now you can't bond the project? So then that's a problem. So you always have to get pre-approved. There's what they call a bondability letter that you can get ahead of time. Even if you don't have a project in mind to bid, you can get a bondability letter, and that tells you uh, what is your bonding capacity, how big of a project that you can go after. Does that answer your question?
Yes, thank you.
And then it looks like we have Paul has raised his hand. Paul, you go ahead and unmute if you'd like to ask your question.
Okay, great. Can you hear me?
Yes.
Okay, thank you very much. Always enjoy these classes. I was wondering, the big players, there comes a time, can you pretty much secure yourself, say if you've, project after project, you end up saving, putting it into a fund. Do you always need to um, have a bonding company and indemnify yourself? Because I just think that in business, the more that you're into this, you would protect your assets, but yet at the same time, you want to protect your clients and everyone involved. Is there such a thing that you're not going to risk everything that you've worked for because certain things you don't have control of? And I would imagine that the big players that have been in business for many, many decades have, I guess they've worked something out. Is there anything legal that one can look forward in the future?
Well, the big players, I mean, like you said, they're big and they require bonds all the time. So they have a rather large bonding capacity but still, the surety still has to underwrite them. They still have to indemnify, because in case there is a loss, they have to recuperate the money somewhere. So anytime that there's a performance and payment bond, there's really no way around that. You still need to indemnify, but the more projects you complete, the more bonded projects you complete, you'll have a larger bonding capacity, and it'll be easier for you to get bonds. But you will still, there's no way around getting the personal indemnity part. You will always
Right,
have to sign that. They will always, but the goal is to not have any claims. So as long as you have no claims, your assets
right,
are protected.
right. Like in other words, what I'm asking is the surety company, say if you want to be bonded for, I don't know, $50 million,
Mhm.
but then a company will put that another 50 million as recourse to that bonding company. Um, can they insure using that as, indemnity type of asset? In other words, if bonding company is going to secure you for 50 million, but that company that has a huge reputation, been in business for so long, says, we have a fund of 50 million. Here it is. As soon as something goes wrong, you take that money or we have that money. In other words,
You're
they
talking about collateral? I mean, you can
exactly.
always put up
Mhm.
collateral for a bond.
Exactly.
The
Okay.
surety will never turn away from collateral.
Okay.
And our program has collateral assistance, which I'll talk about it in later slides. But yes, the surety, if you want to put up collateral for your bond, they will never turn away and say no. Because if there's any issues, they'll take the money from there.
Exactly. That's what I wanted because we
Yeah.
want to know that we have some type of recourse. Because can you imagine having being in a business for so long and something goes wrong that is out of your control and they're, wiped out your whole life's, savings are working. And so I'm glad you said that. So I can't wait to
Yes.
hear about that. Thank
Can
you.
you give us examples of collateral? Would that be a commodity, life settlement, insurance? What exactly
The
will you
sureties will
accept?
take three types of collateral. They'll take real estate, they'll take a letter of credit, and they'll take cash collateral.
You'll take an SBLC then?
A what?
An SBLC?
A letter of
A
credit?
standby
Correct?
letter of credit?
Yes, yes. The surety
From a
will take,
domestic or international bank?
usually from a domestic bank.
Okay, thank you.
And then we had a couple in the chat as well, Rose. The from Bernice Jackson, the contract owner is well protected, but is there a way to contest any claims, or is there a hearing before a claim is paid to review what determined the project on what the project or out to review what determined the project as a failure?
Yes, so the surety is not just going to pay out any claims. There's a whole process. There's negotiations. They'll, talk to you, your legal representative, to see if there's any other way to resolve the issue without having to go to claims court.
Okay. And then for Ken Collins, since each project is different, do we have to pay for the bond for each project even if we don't win the bid?
So for bid bonds, there's no cost. If you're awarded a contract and you have to put up payment and performance, yes, you pay for the payment and performance, but no, the bid bonds are free.
I think we're all caught up in questions. If you want to continue.
Okay. So type the bond. We have the bid bond, which states that, this is what you're going to be posting when you submit a bid. And that what that says is that you as the contractor are going to go forward with the contract should you be the lowest bidder. So if you don't, usually bid bonds are 10%. And so if you don't go ahead with the contract, then you will be required to put up the 10% of the entire contract amount. Payment and performance bond. So the performance bond guarantees that all the work will be completed according to the contract. And the payment bond is guaranteeing that all subcontractors will be paid. A maintenance bond is usually what happens after the contract is complete, which is usually between 1 and 2 years. So it's if anything goes wrong with your portion of the work, then you need to come back and fix the issues. And a completion bond, which really doesn't happen very often, is a very high risk bond. And this is the bond that has to be put in place should you walk away from the contract and a new contractor has to come and pick up where you left off. Any questions? Okay, next slide, please. So underwriting. So what do the sureties look for? And they look for what we call the 3 C's of surety, which is credit, capacity, and character. So under credit, what they're going to look at is the financial strength of your company. They're going to look for your financial statements. Usually they'll ask for up to 3 years of financial statements. They'll look at your work in progress. They want to see how many projects you have going on right now and can you take on another project. They want to see your cash flow. Do you have enough capital to start a new project? Your cash flow and your net worth. So again, financing is very important because as you know, when working on public projects, you don't necessarily get paid right away. It's 30, 60, 90, 120 days before you get the first payment. So the surety is going to look to see, do you have enough capital to pay everything you need to pay for those first few months that you're not going to get paid? They want to look and see if you have, a bank line. What is your credit, your personal credit? Any bank relationships? Do you have a line of credit that you can use as a backup for your working capital? Under capacity, they want to see the ability to perform the work. Can you perform this work? Have you done similar projects in the past? And how big of a projects have you completed? They're going to see, if your largest project has been 100,000 and now you're bidding on a $2-3 million project, it's going to raise the question, like, can you complete this project? Is it too big for you? They're going to see if you have the right staff, the equipment to perform the work. They're going to look at your past, your current, and your future workflow. They're going to look and see if you've done any bonded projects in the past, or if you've only done private projects, your management plan, your continuity plan. They want to know if something were to happen to you, do you have a plan in place to continue with the business so you can complete the open projects that you have right now? And under character, the reputation you have with your project owners, they're going to ask for reference letters from projects, completed projects. They're going to see what your payment terms are with your subcontractors, your vendors, your suppliers. What reputation do you have with them? The surety will conduct calls and will to verify that all the information that you provided is correct. So, any reference letters that you can provide will always work. Also, they'll look at to see if you have a your marketing. Do you have a website that they can go into and look and see what projects you completed? They want to know more about you. They're going to your website to see. So websites are always important, even though sometimes the surety will do their underwriting, but because of their experience that they've had with contractors, sometimes they need a little bit more to approve a bond for you. So again, they'll go out of the way to, call all the references and see what your website looks like. It's just those little things that give your character the value that the surety is looking for to be able to provide the bonds needed. Again, they're just looking to see that the projects you're going after, that you're going to be able to perform and complete them successfully without any issues, because what their goal is for you to have, again, no claims. Any questions?
Yeah, it looks like David asked, would you say that we stand a better chance of having our request for a bond approved if we have an existing bank line of credit in place for working capital first? What are some best practices to satisfy the credit requirement?
Not necessarily. It depends how big the project is. There's different ways to qualify for bonding, which I'll touch on the next slide, but you don't have, I mean, a line of credit is always good. It's good in their eyes. Again, if the bond, there's, resources out there that you can use, which I'll touch on later, about working capital. And so, yes, working capital is always a plus. That's what the sureties are looking for. Because again, a public projects, you're not going to get paid right away. So you need to make sure you have that working capital in place. A line of credit will always help. Does that answer your question?
You must have.
Okay.
Oh, he said yes.
Okay. How do bonds work? Okay, so first step. So it's as easy as step 1, 2, and 3. So step 1 is applying for a bonding capacity. So first you need to obtain a broker. There's many brokers out there, insurance broker, and any insurance broker can provide bonds. However, there are surety bond brokers out there that specialize in bonding. This is all they do, bonds all day long. So you need to get a broker that specializes in bonding. We have broker resources that we can refer you to. That's all they do, bonds every day. So you have a better chance of getting approved with a broker that understands bonds, because they also understands how the sureties work and what the sureties are looking for. And so they have a better chance of putting a package together to represent you in order to get the bonding approval. Once you gather all the documentation, again, it's 3 years of tax returns, 3 years of financial statements, references, applications. It's a lot of paperwork that you need to provide. But the sooner you do this, the better. Once the broker sends the information to the surety will do their 3 C's, their underwriting, and they will give you a bondability letter. This bondability letter is going to say what the rate for your bonds are going to be and what your bonding capacity is. And based on this letter is what you the bondability letter is going to tell you how big of a project you can go for. Now, there's different ways to qualify for bonding, depending on how big the project is. There's one, what we call a quick application, which is based on personal credit only. So if you have a 675 or above with no bankruptcies, you should be able to qualify up to, I think they go up to 1 million now, based on credit only. Anything above that, you do need to submit all the required
You're
documents.
mentally ill.
All the required documents, which is, again, tax returns, financial statements, all that stuff. So I would highly suggest that a company that has never been bonded before, and this is going to be your first bond line, you start with a quick application first. Once you get that bondability letter, you'll know what projects you can go after. And there's a lot of projects out there, maybe necessarily not as a prime directly to the city or to Metro or to those big entities, but as a subcontractor to the prime. Primes, I mean, the large primes like the Turners of the world, Skanskas of the world, PCLs, they have all the large projects and they have, smaller scopes that they're trying to get subcontractors to work on their projects. One of the requirements in their pre-qualification is, are you bondable? And they may not necessarily ask you for a bond, but they do want you to have that bondability letter. So I highly encourage that you start with your a quick application. If you have the credit that qualifies for it, and get that first bondability letter. That way, when you get pre-qualified, you can answer that question, yes, I'm bondable. Again, you need to get this done as soon as possible. Don't wait till you have that project that's bidding in a couple of days, because it does take time. Even with a quick application, I mean, before it used to be 24 hours. Now it's taking 2-3 days to get that approval. So you need to start this early. Step 2. So once you identify a bidding opportunity, you request a bid bond from the broker. And since you've been pre-approved, they already have all your information. They already have your documents. So it shouldn't take that long to get that bond. You submit the bid bond along with your estimate to the project owner, and we wait for the bid results. Step 3, submit final bonds to start jobs. So now you've been awarded a contract, congratulations. And so now you get the payment and performance bond that are required for this project, and you begin the work. Now, it sounds really easy. It does take a little bit longer than, but if you start the process early and you get pre-approved for bonding, it should not take that long once you have that project in place. Now, if you have your bondability letter and you identify a project that's larger than that, then there's resources out there that can help you boost up to that bid amount that you're looking for, such as collateral support, which I'll talk about later. But there's resources out there that you can take advantage of that the city and Metro has put in place to help contractors overcome this bonding hurdle. Any questions?
Looks like Paul raised his hand again. So Paul, feel free to unmute.
Great, thank you very much. 2 questions. Why do you think it takes 2 to 3 days now in the era of technology versus, back in the day, 24 hours? That's my first question.
There's a lot of requests and not enough resources. So not enough people doing the work on the other side.
Why do you think that?
Um, I'm not sure why there used to be a lot of surety underwriters, and it seems like the amount of underwriters has gone down. The brokers have the capacity to submit the information, but it is on the surety side that is the time, is the lack of time.
Hmm. And then my second question, can you say if your credit's not all that great, can you hire a partner in your company? Say if you and your partner has stellar credit, can that suffice? Or would all owners have to submit?
all owners have to submit credit. And
Okay,
they will look at all owners' credits. So it does help that, if there's two owners, one has an excellent credit and the other one doesn't, but they will look at both.
okay, fantastic. Thank you.
You're welcome.
And then we had a couple in the chat. Subcontractors are also required to have a bond, question mark. Does that mean both the contract holder and prime can file a claim against the sub?
So subcontractors are required, well, it depends on the project owner if they require the subcontractors to bond back. What was the last part of the question?
Let's see. Subcontractors are also required to have a bond, question mark.
Yes.
Yep. I'm sorry, the chat is moving around for me. If I'm assuming if so, does that mean both the contract holder and prime can file a claim against the sub?
Yes.
Yes. Okay. And then another question, like the city of Los Angeles, do you know if city of San Diego or county of San Diego offers bond assistance programs as well?
I know the city of San Diego has a similar in-house program like ours, where they provide technical assistance and collateral support.
Yeah. That was it. I think we're good to keep going.
Okay. So what do bonds cost? So like I mentioned, bid bonds are no charge. Performance and bonds are between 0.5% and 3% of the contract amount. Payment bonds, the price is included with the performance bond. Now, if a contractor is considered high risk in the surety's eye, the price will be the highest, which is 3%. Also, if you are putting up collateral for a bond, they will charge the highest rate, which is 3%. Any questions? I have seen in the past, like with airports, where they require bid bond only projects, where you're required to provide a bid bond but no performance and payment, which is very rare, and it's hard for a contractor to qualify for those because the sureties make their money on the payment and performance bond. So if there's no requirement and the bid bonds are no charge, they still have to do their whole underwriting, because if you fail to go forward with the contract, if you're the low bidder, they still have to put up the 10% bid bond amount of the total contract amount. So they will charge a minimum fee for a bid bond, but it's very rare. But I have seen it in the past. Any questions?
Looks like Paul raised his hand again. Go ahead.
Thank you very much. As far as the collateral pays 3%, no matter how stellar your credit is and how long you've been in the game, uh, building projects, if you come in with collateral, the bonding surety company is going to want 3% on that. Is that true?
So you are the first person that has ever asked if you can put collateral when it's not needed. So in that case, I'm assuming that the surety will charge like a prorated premium or cost, which is usually 2%, because you're putting up collateral because you want to have that security on the side, not because you're high risk.
Yeah, and I'm sorry, I'm a kind of guy that I look down the road and I'm just wondering, collateral, I'm sure companies use that. And so that's maybe I'm the odd man, but I always think outside the box and not just what's in front of me, but, you know, years down the line, if you work for something and you're leaving a legacy for your family, what does one have to do? So I'm sorry if I'm asking these questions and
I know, I mean,
okay.
I like questions,
Okay, thank you.
Um, my question to you would be, you're anticipating that you're going to have claims. Why is that?
No, I am not anticipating. What I'm trying to do is say if a company makes enough money, you're just trying to reduce the cost of doing business.
Mhm.
So that's my whole thing. If you can generate a lot of cash, why do you have to pay, um, you know, big amounts of money to third parties? Of course, you want to be bonded, but is there a way that you can reduce your cost of doing business? That's what good business is all about, right? How am I going to keep most of the money that we make on projects than to just dish it out? That's my thing. It's not that I'm wanting claims, nothing like that.
Okay, so let me see. So you're saying that you want to put a collateral in place of the payment and performance bond?
No, what I'm
Oh,
trying to
okay,
say is this is all new to me, and I'm
right.
just saying down the line,
If you
it,
have the
mhm,
financials to qualify for the bonds with no collateral, then you're going to be charged a lesser amount than the 3%.
mhm.
And I mean, there shouldn't be any issues.
Great. That's what I want to hear,
Yeah.
Thank you.
You don't have to put up collateral. If you have the cash, you need to save that working capital because you're gonna need it. And just as long as, again, if the work progresses satisfactory and there's no issues, yeah, you shouldn't have any claims. Everything will be protected.
Great. Thank
Your
you.
rate will be less than 3%. That is, the 3% is the highest when the surety thinks you're high risk or you've never been bonded before, or you're just
Mhm.
starting a company. Once you start doing bonded projects and you start getting your increased bonding capacity, uh, the rate will be way lower than 3. I mean, I've seen even like 1%. The
Nice.
large primes, their rate is
Hmm.
super low.
Exactly.
Yeah,
That's what I'm getting at. Thank you so much.
you're welcome.
And then
Rosa,
we
this is
have
Ken Collins.
Yes.
Hi, Rosa.
Hi.
Basically, basically, much like the municipality, city, state, federal, they don't carry insurance. They're self-bonded, meaning they have the financial capacity to move forward or pay any claims or whatever that's filed against them. So
Right.
if a company has that financial capacity, whether it's cash and or collateral, you're saying you don't have to put up a bond. You just have to show
No,
capacity.
so if a project requires bonding, there's no way around that. What I'm saying is you don't have to put up collateral, and if you have the cash, if somebody were to try to place a claim, you have the money to pay them, and so that the surety is not going to come after your personal assets.
Okay, thank you.
You're welcome.
and then in the chat we have, do we pay the performance and payment bond prior to being issued?
You have 30 days to pay it.
30 days. All right. And then if there is a claim, can you pay costs out of pocket versus using the claim to avoid getting a point on your bonding record?
Yes.
Yes. Okay. All right. I think those are all the questions right now.
Okay. Next slide, please. These are all great questions.
On
Thank you.
the SBLC, does it have to be in the name of the people, or can somebody who has an SBLC pledge it for a company?
It has to be in the name of the company that's
In the name of the company.
the bonds are going to be. So it has to match. The letter of credit has to match the bonds.
Okay, thank you.
You're welcome. So surety versus insurance. Like I mentioned, the surety is a 3-party agreement versus insurance is a 2-party agreement. With surety, no losses are expected, and with insurance, you're going to have losses. They expect you to have losses. With surety, the losses are you have to pay them back, and with insurance, you don't. The premium on surety covers the expenses. The premium on or insurance covers the losses or expenses when there's a loss. The sureties are selective, meaning they underwrite you and they can decline you if you don't meet the underwriting criteria versus insurance, they will, as long as you pay the premium, they will insure you. Any questions? Okay, next slide, please. Now, what resources are out there? Having said all of this about bonding, what resources are out there to help contractors overcome the bonding hurdle? So the city of LA, the city of LA, Metro, San Francisco, and Alameda County have the contractor development programs in place to help contractors overcome this bonding hurdle. So a little bit about Meriwether and Williams. We're a full service property and casualty and employee benefit, retirement, and personal lines insurance brokerage firm. We were recently acquired by Have International, which is the sixth largest insurance company in the world. We also provide line risk management and specialty programs. But what we're mainly known for is our bonding, technical assistance, and contract financing programs in San Francisco, here in LA, and Alameda County. Next slide, please. So the program purpose and mission is to reduce the barriers of access to public construction contract opportunities and help build small, local, and diverse contractor capacity. And the way we do that is by what we call the 4 pillars of contractor development, which is the prime contractor, no, the assessment and technical assistance, the bonding contract and financing assistance, education and training, and our prime contractor partnership. Next slide, please. So under the assessment and technical assistance, so in order to take advantage of all the services we provide is you have to enroll in the program, which is a one-page enrollment form. Once you're enrolled in the program, we assign you a dedicated account manager or a contractor development manager that will act as a professional, that will do a professional assessment, which usually takes about an hour. So you'll set up an assessment meeting with them. They'll go over your goals, what you intend to achieve by joining the program, and how we can help you achieve those goals and take your company to the next level. We do the one-on-one consultation. We'll develop a work plan, which is a roadmap that will guide you to what you need to have in place or work on to be ready to bid on public opportunities. We facilitate referrals to program partners and resources such as, like I mentioned, the brokers that specialize in bonding, or a CPA that specializes in construction companies. We have a list of resources that we can provide to you, depending what your needs are. Once you're in our system, you'll have access to our Contractor Weekly, which is an email that goes out every Wednesday afternoon that outlines all the different events, outreach events, any pre-bids, any projects that the big primes are working on. If they need subcontractors, everything will be on here. So if you want to make sure that you do get this email on Wednesdays, and if you don't, just reach out to us and we'll put you on our list. And we also have referrals to specific project opportunities. So the primes, when they have these large projects, they'll email us requesting subcontractors for the different scopes. So we will go through our list of qualified contractors and provide those lists to them. And that way you'll make the connection. We can help you get pre-qualified with the primes, because most primes have a pre-qualification that you have to do in order to work with them. So we can help you with that. Some primes have, a larger pre-qualification application, and some are smaller. So again, we can help you with that. Next slide, please. Okay, bonding and project assistance. So back to bonding. So if you've never been bonded before,
we did get a question there, Rosa. From David, a colleague's electrical contracting company has a $1 million bond in place. He's currently using 800K of it on a recently awarded contract with California DGS. How can we apply for higher bonding capacity so that he could go after more public works projects at a time? What are the requirements to do that?
Okay, so that's when collateral will come in place. So you have to talk to your broker and see if you post collateral, will that help you increase your capacity to bid on larger projects or on more projects? If the projects you're trying to bid on is with the city, metro, or one of the programs that we have, then we can help you put up that collateral instead of you putting up your own collateral, so you can boost that capacity to be able to bid on additional projects. Any other questions?
You're all good. I think you're good to go.
Okay, so bonding assistance. So again, we can help you either obtain your first bondability letter, or we can help you increase your bonding capacity to bid on larger projects. Once you enroll in the program, you have access to our collateral support to bid on these projects. So the way our collateral support works is you identify a project that you want to bid on, and you talk to your broker, and the broker says, well, you're going to need collateral to get approved for these bonds. So then you come to the program. If the project is within one of our sponsors, and like I mentioned, our sponsors are the City of LA, Metro, the county, Alameda County, and San Francisco. If the projects are within any of those entities, we can help you by putting up a letter of credit here in LA up to 250, and up north up to 750,000. So instead of you putting up your own collateral, we will put up the collateral on your behalf, and it will be a letter of credit. When you use the program collateral, you're also going to ask to put funds control. So funds control is a third-party escrow account that needs to be set up with a third party. And what that means is the funds for the specific project are going to be deposited into that escrow account, which is going to be set up under your name. And the funds control company is going to be managing the funds to make sure that the funds are being utilized specifically for this project. You're going to make sure that you're getting your subcontractors and your suppliers paid for that project, so that there's no claims on the payment bond. And they're also going to make sure that you have enough funds to pay your payroll, your overhead, just everything that you need in place to finish this project satisfactory. Any questions?
Yeah.
Wait, go back. I'm not done.
Oops.
Sorry.
Sorry. Oh,
we also have contract review.
Rosa, Paul raised his
Yes.
hand. Go ahead, Paul.
Yes, Rosa, you're doing such a great job. How much, say, if you were to ask the bonding company for collateral, that 750,000, how much extra does that cost?
So our collateral support or our collateral assistance is free.
Okay,
You don't have to pay to use our collateral support. There's
thank
no
you very
fee to obtain a letter of credit.
fantastic. Thank you very much.
You'd have a follow-up question in the chat. Follow up to last question. This was regarding the $1 million bond in place. Follow up to last question. In order to receive assistance from M&W on collateral assistance, does the company have to be Los Angeles based, or is the main thing doing business with LA, SF, Alameda, have an awarded contract from them?
No, you don't have to be here in LA.
Good.
Let's see. So we can also provide contract review, project assessment, and we have a field support project manager in our team that can help you with contract review. We can do bid document review. So before you submit a bid, we can set up a meeting to go over the bid documents, all the requirements, making sure that everything's signed, notarized, and that you've answered all the questions, and that everything's in place to submit a bid. Now, we cannot look at the numbers because you are the experts on that, and it is a conflict of interest, but we can look at the administrative requirements. We assist with project risk identification and mitigation. So if we put a collateral on a project, we will do contract monitoring from the beginning to the end. We do monthly reports to make sure that the project is going successfully, that there's no issues. But if there are any issues, we can help mitigate those issues. We can talk to the project owner. If there's any issues with change orders, we can assist you with that. Again, we have an expert in our team that has over 35 years experience when it comes to contract monitoring. Now, accounting CPA. Depending on how high your bond requirement is, usually anything above 3 million, the surety will ask for CPA prepare financial statements. And we know that those could be costly. I've seen financial statements between 10, 20,000 for financials. They're very costly. So for a small contractor, that is a hurdle paying for that. So the program has a subsidy up to 3,200 that you can utilize for financial statements. Now it is a one-time fee, so we always recommend that you use it specifically to get your bonding, not just to get financials on a yearly basis, but we will require in writing the request from either the broker or the surety saying that this subsidy is being requested for financials to either get your first bond line or to increase your bonding capacity. Any questions? Now we can either work with your current CPA, or we have CPA partners that specialize in construction companies that we can refer you to. Next slide, please. Education, training, and contract support. So we all know how important education is. So we hold monthly trainings such as this one every last Tuesday of the month on different construction topics. We also have training academies. We have a bidding and estimating academy. We have a contract award and management academy. These are all hybrid. So first and last class are in person, and the weeks in between are through Zoom. So if you're interested, for bidding and estimating, the only requirements are that you be enrolled in the program and that you have an active contractor's license. For a contractor award management, you have to be enrolled in the program, you have to have an active contractor's license, you have to either have attended our bidding and estimating class or be in business 3 years. But other than that, we do assist some professional services, but our academies are construction gear, so you have to have a contractor's license to attend. Now we are working to support professional services. We do have companies in our program that are IT services because recently, like the airports have started requesting bonds for IT services or maintenance companies. So we do have some professional services in our system, but our services are mostly geared for construction companies. We can create a contractor profile for you, like a capability statement, such as the one you see here. So if you don't have one, we can create one for you. You utilize this when you go to events, or if we help set up a meeting between you and a prime, you show them our signature profile. And we've been in business for a long time, so everybody recognizes our profile and they know that when you show this, you're coming from our program. We also have training videos library in our YouTube. And so we can share this information with you so you can go in there and look at our past trainings, past academies, all that good stuff. Next slide, please. Any questions?
Paul raised his hand, but also asked in the chat, do you have in-person classes in San Francisco? I don't know if that was a question. Okay, yeah, I don't know.
Yes, we do.
If you have another question, Paul, feel free to.
No, that was it. Thank you.
Okay. All right, yeah.
Our contractor partnership. So we have partnered with all the large primes that you see here, and we're constantly adding new ones. These are the large primes that are currently working on the large projects. Right now, PCL and Webcor have joined together to do or revamp, I guess, the Coliseum here in LA. It's going to be a big project. There's a lot of work at LAX as well that a lot of these primes are working on. So if, again, we get requests from the primes to provide them with qualified subcontractors. So I highly encourage, if you're not enrolled, please get enrolled. We'll assign you a contractor development manager, and we will get started with making sure you have your bonding in place. If you want to get certified, your certifications, all those things that you need to have to bid on public opportunities. That way, when the primes reach out to us and say, we need, ABC contractors for these scopes, then we will make sure to provide the list of qualified contractors. And I want to make sure that you're all on those lists so that you can start working on these large primes, because one of the easiest way to get into public projects is to start as a prime as a subcontractor if you never been on public projects, because it's not an easy process. Being a prime directly to the city or to these government agencies, it's not easy. So I highly encourage that you start as a subcontractor with the primes. That way you get your foot in, you get a feel of what it is to work on these public projects, and move your way up as to bid directly on public agencies. Any questions? Next slide, please. Contract Finance Assistance Program. Now, you heard me say a lot how working capital is very important when it comes to public opportunities. So we have this program in place where we call CFAP. And this is a kind of like job-specific financing, where we use an awarded contract as collateral to get a small short-term loan to get you to those first few months that you're not going to get paid. So this program that we have is, again, they will look you can start, you have to get pre-qualified first. So that's the first step. I've seen a lot of contractors that, everybody needs financing, right? But the hurdle that they have is they don't get pre-qualified because it is a lot of documentation you need to provide. So again, just like bonding, you need to get pre-qualified ahead of time so that you get that first step done. And once you identify a project you want to bid on, then you can start with, requesting the loan for that project. Now, again, it is a short-term loan. Usually they'll do a cash flow projection for the first 6 months to see how much money you're going to need to get you through those months, and they'll do a loan based on that. The maximum loans are $250,000, and the fee is a 9.5% interest plus a 1% origination fee. So you must be a small business and you must be enrolled in the program, and it has to be in construction contracts. So we have a person or a representative that works on CFAP that if you are interested, once you get enrolled, once you do your assessment and your work plan, then we can refer you to, so you can start the process in getting pre-qualified. Any questions?
David asked, are you aware of any surety companies that offer bond assistance, technical assistance to professional services companies?
Well, not really, because bonding is usually not required for professional services. So depending what type of professional service, I mean, like I said, IT is a new one that they're starting to write because there was no bonding requirement in the past. But other than that, I don't see professional services needing bonding. Okay. So now connecting with your CDM. So now that we talked about bonding, talked about the resources we have, once you're enrolled in the program and you get assigned a CDM, what happens? Well, they'll set up an assessment meeting, they'll do a work plan, they'll give you the work plan, which is that roadmap that I mentioned, but then what happens? So in order for this relationship to be successful, we must establish a clear communication. So you need to schedule regular check-ins. If your CDM doesn't say, let's set up our next meeting, you need to tell them, when is our next meeting? What is our next step? It could be monthly, it could be depending on what your needs are, it could be weekly. I mean, it could be once a month, twice a month, however your schedule permits and however is needed. You need to set up regular check-ins, because if you don't communicate with your CDM, how can we help you be successful if we don't communicate with you? If we, after that first meeting, we disappear. So we need to schedule those regular check-ins. You need to be transparent with us with what your challenges are and your goals. That way we can help you. Tell us what your challenges are and we will, strategize. If we don't have the answer, we will try to find the answer for you, how we can help you overcome those challenges. You need to notify your CDM of any changes of your business, because our database always needs to be up to date, so that when we get those requests, we have the correct information for you, so we can provide the correct information to those primes looking for subcontractors. So again, clear communication is key. When you set up the meetings and you come to the meetings, you need to come prepared. And that means is come with specific questions and support that you need. If there's a bid that you want to go after and you need bid document review, download the bid and go through it and write down your questions. Set up the meeting with your CDM and have those questions ready. Send us the information first, we'll review it, and then we'll come together in a meeting and we will give you our feedback on what you need to know on that bid. And then we will try to answer all your questions, but you have to come prepared, because we're not going to do the work for you. It's a mutual thing here. You need to do your part. We will do our part and we will try to, help you as much as we can. Share any updates on active projects or anything, any bids that projects that you won, because again, we have newsletters that we put out with success stories. And I want to make sure that everybody that's in the program that's gets awarded projects or gets a new bond line or something to celebrate about, we want you to be our next success stories. We have contractors that have come in brand new, just started, and now they're bidding on $8, $9, $10 million projects. And so we want everybody to be there. That is the goal of the program, to help contractors increase their capacity, to help them grow, to be successful, to be that next success story in our newsletters. Again, bring your required documents when it comes to the bid or financials. We can review your financials. We have resources that we can refer you to help with your financials, to help with cleaning up your books. Insurance, if you need insurance, we have resources for that. Leverage your CDM expertise. So we have, like I mentioned, different team members in our organization that can help you with different things. Like, we have bonding experts, we have a attorney in our in-house that can help you. We can help you with, insurance requirements. We have, experts in certification. So we have different experts in our team that can help you. So use them. We're not just a resource. We're here to help you, to guide you. Ask for support in business planning and growth strategies. Let us know what you need and give us feedback as well. If we give you, a resource or, an advice on something and it's not quite what you're looking for and it didn't quite work out, let us know so that we can improve. There's always room for improvement. So we're always here to hear you out and see what can we do better to help you, because, you're not the only one that may be struggling with that. So we want to be able to help everybody. And so we're always trying to do better and, be the best program out here to help contractors grow. Next slide, please.
Yeah, there's a question after the surety bond professional services. Bernice said, yes, a lot of website contracts I find require bonding. David said professional service firm type is construction project management owners rep services, not a GC or a sub. Will you be sharing a list of bond brokers that you typically work with?
We can share. I mean, if you send us an email, I'm not going to share it here, but we can email you a list of brokers.
like Paul raised his hand again, so feel free to go ahead, Paul.
Thank you. As far as your in-house attorney, I take it there's no cost for that?
Right.
Okay.
All
And
the
then
services we provide are free to the contractor, unless it's
fantastic.
like the loan, yeah, that you do have to pay the interest, but
Okay. And then say if you had questions, you could meet with your CDM and the attorney and go over some things. Is that
yeah,
okay?
yes.
Okay, fantastic. Thank you.
As long as what you're asking is not a conflict of interest, but I mean, we can decide there what is that you need.
Conflict of interest, say other
Just, I
contractors of the
mean, if,
prime.
like I mentioned, like we can't help you on estimating, like with the numbers, we
Mhm.
definitely can't help you with that.
Gotcha. Okay, thank you.
Okay. You're welcome. All right, commit to your business growth plan. Like I mentioned, implement recommendations provided by your CDM, and we will go out of our way to provide recommendations for you, like the best what we think that will help you and will help you grow. However, if you don't follow the recommendations, we, we can't help you if you don't want to be helped, type of thing. So, I highly encourage that you implement the recommendations. And if they don't work out, again, please give us a feedback so that we can improve. Track your progress towards business and project goals. Like we want to track your growth. So, but if you don't share the progress with us, we can't track it. We can't see, okay, now you're here now. Where do you want to go next? How we can help you take that next step? Or how can we help you grow or increase your capacity? Like just again, communication is big. Actively participate in trainings, academies, workshops. Again, the information we provide, it's always useful. And we try to see what contractors are looking for. We send out surveys so that you guys can tell us what information you want, what trainings, what workshops you're looking for, so that we can provide the best service. Education is key always. And so please, when we send out the surveys or at the end of this workshop, fill them out and let us know what we can do better, what you want from us, what other topics that you want us to go, cover, and we will find the experts to teach those workshops. Again, in order to be successful with your CDM, you need to build a strong working relationship. Treat your CDM as a strategic partner, not just a resource. Again, we're here to help you grow and be successful. Provide feedback and support received. Work together to identify new opportunities and long-term success. We will always look for opportunities for our contractors, and we will send them to you. Again, it is up to you whether you want to take those opportunities or not. But if you do, we are definitely here to guide you and help you grow. As I mentioned, all the services we provide are free. So please take advantage, because again, the entities that put this program in place, they are paying us to help you. They realize that a lot of contractors go through a lot of hurdles. And so a way that they're helping you bid on their project is to put resources like us to help you overcome those hurdles. So please, if you're not enrolled, take advantage and enroll in the program. Let us know, email us, and we will send you that one-page enrollment form, and we will, take the next steps with you. Next slide. Any questions?